Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, September 29th and Friday, September 30th, 2016, as we wrap up, say it with me now, the month of September and the third quarter 2016 will be done on Friday. Unbelievable how time flies. Here's a look at the ES front month futures contract. This is the daily chart of the broad market. Folks, I'd like to tell you there was a lot to discuss, but nothing's all that different than it has been for a while now. We've been pretty flat in the markets over the summer. Before that, there was a little bit of back and forth in June and a little move up early in July. And then before that, we were flat in late March through late May. It's not been the most volatile year on record. Then again, last year was maybe a little worse until around this time of year. By now, things were definitely moving. We're not seeing it so far this year as much. We've had some individual great days here. But I always like to tell people you can't expect 5 great trading days a week, but I like to see 3 of them, and we've definitely been averaging closer to the 1 to 2 range in terms of super action. So you got to be real picky. You got to stick to your rules, stick to your trading technical indicators that we offer, and not overtrade, or you're going to get yourself hurt in this environment. What does the rest of the week hold? The reason I bring all this up is, as much as this time of year is usually exciting, probably not the next 2 days, especially Friday, as we head towards what's called quarter-end statement printing and window dressing. The big players will already have the stocks basically where they want them or very close to it for the end of the quarter. Now, what you can see sometimes, and Rich was commenting on this in the lab this morning, stocks that are maybe the bigger names like Apple that are up a little bit, they might drift a little higher over the next couple of days just because then everybody who bought them this quarter can say they're up for the quarter is a certain amount of money. That type of stuff, there's a lot of games that are played by the big players to make that happen. Remember, bonuses and such are calculated on quarter end and even more so year end. So at the end of December, we'll be looking at this again. It's even worse than numbers. In the meantime, here's what we have for the markets. We're just dead flat. We're at the 2162.50 area. Remember that number? It was a big number for a long time. That's where we were at 4th of July, 2162.50. We're still there, literally closing at 2162.75. Let's go through our major indices. Crude oil gained after the numbers came out today. 47.12. That's up $2.45. Gold lost $4.80. It's been stuck in a horrible range for a while. The S&P cash index was up 11, almost 11.5 points. The NDX was up 8. SOX was up 1, almost a new closing high on the SOX. The biotech's down 27.96. The VIX is down 71 cents, closing at 12.39, all the way back. I mean, seriously, we were talking about how bad it was in that rare case where we sat under 12 for a while. We're almost back there again already. That's because the volatility has been so horrible. The trend finally gets a super low reading at 0.68. That brings the 10-day moving average down to 1.09. Let me see. Let me count backwards here on these dots. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, the problem is tomorrow another low reading about the same area is going to come off. So anything higher than that will move the average up, and then there's some higher numbers. So it would take a while to get us back to that 0.85 10-day moving average, which would be a sell signal in the market. NASDAQ volume 1.67, which is poor, but it's the best of the week. We've had a slow week, and so nothing exciting there. Now, advanced decline ratio on the NASDAQ plus 571. Advanced decline ratio on the New York was huge, plus 1546. I mean, not huge, but definitely that's good positive market breadth considering everything. Google down 67 cents, holding near highs. Apple, as I said, could drift higher, up 86 cents. Amazon, another one that could close higher, up 12.61. Netflix up just 41 cents on the session. Does that give us the 13 sell signal? It does not. Oh, we got to be above the 8, so no, you're not there yet. Tesla, nothing exciting going on there. All right, so let's take a look at the intraday action. Remember, we don't do market previews typically on Thursday going into Friday. I'm certainly not going to do it Thursday going into a Friday quarter end. So this is it for the week. We'll next talk about the preview for next week, which will be the first week of October over the weekend, and we will talk about what we expect for the months ahead. Obviously, this is usually a time of year where we're heading down, and I should point out as well, by the way, September is historically one of the most negative months of the year, meaning that not that it has to be massively down, but it's the only month of the year that on average over the last 100 years gives you a negative return in the markets. Well, if you look at the ES and where it was, or the S&P, let's do the ES, where it was on the 1st of September. It closed August, let's do it this way, at 2168.50. So it's currently down all of 6 points. That's not exactly super negative. We could have 2 slightly up days and end up with a non-negative month. So we're not falling apart like we normally do around this time of year, around a lot of the budget talks. All right, let's look at the intraday action closely. Here's the 5-minute chart. So the last 2 days, we had a gap down on Tuesday, came up, came back, came up, and then it's dead flat in the afternoon, and I mean dead flat. Today we gapped up a little bit. The first hour was really slow, filled the gap, drifted lower, drifted back up over lunch, and then there was a little bit of news, got a pop, and the ES ended up making new highs, breaking out, closing near those highs. NASDAQ side never really made new highs on that move up. So here's the NASDAQ. All right, so what do we have for economic data left this week, both days, Thursday and Friday? We have more data than we did on the first 3 days. We've got the third look at GDP tomorrow morning, Thursday morning. For the second quarter, that's not a big number because it's already been seen twice. Initial and continuing claims and international trade in goods. Those are all at 8:30 a.m., an hour before the bell Eastern time. Pending home sales 30 minutes in, and natty gas, that's the weekly number, an hour in. On Friday, an hour before the bell, personal income and spending, core PCE prices. 15 minutes in, we've got Chicago PMI. 30 minutes in, Michigan sentiment, the final look at that. All right, that is it, folks. That is what we've got left this week, and again, end of quarter, so I wouldn't expect much. Hopefully, if we can get something done, it'll be the first half of Thursday, and then that sucking sound you will hear will be everybody leaving the building early for a self-made long weekend while the money managers get ready to spend all the big money they made for the quarter, for those that were up anyways. Charts, as usual, brought to you by eSignal 12. If you've not yet taken a trial of our services, feel free to do so. We will help you out. October is a great trading month. Now is a great time. Hope you have a great trading Thursday, Friday, and we'll talk to you over the weekend.